What's going on, YouTube? Stocks by the Numbers, welcome back. Wanted to do a quick update here on STEM Inc., ticker symbol STEM. And honestly, I don't really see any big news, but we have the looming potential rate cuts coming. And of course, people get overly excited about this. In my opinion, probably not going to happen, but we're seeing a big pop here across the energy sector. We're seeing big moves in companies like SunPower, First Solar, Enphase, and of course, STEM Inc. So it's up here at $1.43 right now, was up to almost $1.50. Stock still holding about 15%. And we jumped up immediately and got right back above this trend line. You can see it tried to retest and then broke up above it and has recently come back down, rejected just now recently, and is now slightly bouncing off of the trend line. So we'll see exactly where it closes. If it does close above that trend line and continues this momentum, we may possibly see like 160, 170 maybe over the next couple of days. But unfortunately, in my opinion, I think it's going to be short-lived because I know everyone just continues to bank and hope and pray for these rate cuts. But again, the markets continue to go higher no matter what the heck was going on. So this is, again, why I always preach that, in my opinion, if we're going to rally and explode from November 1st and just consistently run for like 6-7 months straight, without the rate cuts coming, then in my opinion, I have no idea what people are getting so excited for, to tell you the truth. Because again, if we ran the markets this high on the hopes of rate cuts that never came, then when the rate cuts do happen, if the markets either don't move or if they actually start dropping on that news, in my opinion, it would be 110% justified. I mean, again, you can't have it both ways. Rate cuts never happened. Rates were increased and markets continued to go higher. So the fact that everyone's waiting for like this big explosion to happen across the board when rates do get cut, in my eyes, I just don't see it. And of course, I still say the higher we go, the harder we should fall. And the fact that we continue to climb is basically adding to that quote unquote reverse market crash theory, where we're going to turn around and, the S&P is going to be at 9,000, the Dow is going to be at, 78,000, but it's also going to cost, $11 for a loaf of bread. So, you really have to pick your battles, which is why I say, in my opinion, if we really want to save these markets, we have to start chunking them down and selling them off and bringing them back down to reality. And then we need to reset at a realistic level, and then we can bounce and take that next leg higher. But again, that's just my opinion. These things are out of our control. But STEM here seeing a nice pop, 15%. And again, we really have no news. A lot of this news came out when they reported earnings, which of course was back here early May, and it was a pretty big disappointment. And again, this company, in the fundamentals, again, we could potentially make the argument, yeah, maybe the market cap should be like 100 million and change higher. This is too low. But again, these companies feed off of catalysts. They feed off of earnings. And of course, they feed off of consistency, whether it's good consistency or it's bad consistency. And a perfect example, of course, is a stock like NVIDIA, right? Consistent, positive catalyst, constantly getting upgraded, constantly beating estimates, constantly beefing up guidance, increasing forecasts moving forward. So it's nothing but positivity. So the stock just keeps going up and up and up. And we look at something like STEM and we see that it's basically just consistent negatives. And we're constantly going down and down and down and down. So again, even though it may not make immediate sense to you, unfortunately, this is why I always say, in my opinion, follow the money, follow the revenue. And I know that STEM was a smaller cap stock. This was definitely more of a speculative play. And we were talking about this short-term volatility that you had to deal with for the potential revenue and the backlog that was going to start coming in for the company, and the fact that maybe down the road we can potentially see $3, $4, $6 a share, right? So if you're able to hold on for the long run and deal with this volatility, then of course more power to you. Anyone who got in recently, maybe down at those lows, 116 or like 120, 130, now you're sitting here, you have a quick like 10%, 15% pop. If you want to take the money and run, completely understandable in my opinion. But here on this chart, I'm really not seeing much of a direction, like a clear-cut picture for us again, there's the 1-year chart. We came down to the bottom fib 116, made those new lows, and then we tried to reclaim the trend line, rejected, and now we had this pop today, basically right back at the trend line. So if it does want to continue up, again, maybe if it wants to meet up in the next day or two with this 20-day moving average, we can see potentially 160, maybe mid 160s. So we could still have about another 15% or so to run from this level. But in my opinion, it probably will eventually tap out somewhere soon and probably begin to sell off, only because it doesn't have the fundamentals to back it up, right? If we were looking, maybe in comparison, maybe something like a Fubo, even though certain things, again, like their book value has slightly been coming down, but on the flip side, that company is actually growing. The revenue is up, right? They reissued guidance back to where it initially was. The subscribers are up quarter over quarter, year over year. So something like that, you understand, it has a bunch of positive catalysts behind it. So something like Fubo right now, if it goes on a run from the low ones, it could potentially get all the way back to like a 220 or something, and you can see like a 60, 80% run potentially on something like a Fubo. Something like STEM, though, again, doesn't really, in my opinion, have the fundamentals to back it up in its current state. And we can see again that even since February, the stock got up and only tested that 50-day moving average once and immediately rejected, and has been basically well below the mid-Bollinger Band, let alone the 50-day. So that's why we can see, again, we technically rejected and kind of hung out right at that trend line, but it's also at the mid-Bollinger Band. You can see $1.47, stock ran up to 150 and then pulled back now. So this is why we can potentially, I'm looking again at the maybe low to mid 160s. If it really wants to, it can potentially try to get back to this 50-day moving average of 171. And obviously, if you got in recently at the low ones, that would be a phenomenal percentage return for you just inside of maybe like a couple of days or a couple of weeks, depending on when you got in. So in my opinion, again, for the short-term traders, if that's what you were going in for, then I would say, in my opinion, again, this is not financial advice, this is just my opinion, but I would say if you did get in for a trade and now you are seeing the pop and have the trade and it is successful, then in my opinion, I would say don't get greedy, and you might want to consider taking the money and running, either on this move or a potential move over the next day or two. But looking here on stock charts, we can see the RSI sitting here at only 46.5, right? But we've been basically below that mid benchmark since the ball dropped. You can see since basically 2024, the stock hasn't really exploded and rallied above that mid benchmark of 50 on the daily RSI. So that's why I'm saying, again, maybe another day or two of slight positivity for STEM, but after that, chances are it's probably going to start pulling back in my eyes. Switching over here to the weekly, RSI, basically same thing, right? We can go all the way back to here. This is like October, November of 2022. That was the last time the weekly RSI was actually steadily above that mid benchmark of 50. So this is what I mean. Right now, a stock like this is kind of weak. And I understand people may, cite the short interest and whatnot. And I appreciate the fact that, we could potentially get a squeeze, and we can see multiple rejections off the mid-Bollinger Band here on the weekly, right? The mid-Bollinger Band right now is 222. So obviously, if we rally from 140 to 222, that would be massive for a lot of people. But I don't know if I would necessarily bank on that. But weekly RSI sitting at about 35. The MACD relatively flat. But on the daily, we can see the MACD on this pop actually now helped it cross to the upside, and now it looks like it's potentially starting to trend upward. So that's why I'm saying we can potentially, of course anything can happen, that's why we have to constantly use the word potentially, right? But we can possibly see a rally up to that 50-day 171. But I want to check the pivot points real quick before I let you go. And we can see that we're right at a level here of 146, right? Stock hit 150 and pulled back now 143. Let's see where this trend line is exactly. It's about 144, which would now meet up again with that 20-day moving average. So we may potentially end up closing and looking like a quote-unquote rejection off of this support level, resistance level now. But again, if we close below 146, we may actually pause for a day and then maybe take the next leg higher. But it's really hard to call, in my opinion, because again, the short sellers really hit this one up. And anytime you can see, anytime there's a run up, we start to have a big sell off down. And then we pop because we're oversold and try to reclaim some, trend lines or some moving averages. And then we get shorted and we drop back down. So this honestly has been a short seller's dream. I mean, the stock's been in a downtrend essentially for years. So it'd probably be very hard to lose money on the short side with this one in its current state. So if people, want to immediately start betting against the stock because it had a pop of 10, 12, 15%, in my eyes, it's actually understandable. But yeah, MACD flat on the weekly, and here we can see our pivot point isn't even on the screen. So, next level 586, that ain't happening in my eyes. But this moving average 367, that would be an immense explosion off of no catalyst. So, in my eyes, I really don't see that happening. What's this level here? This is 201. This is back in 2001, showing a pivot point at 201. And we can see that's where we recently, almost rejected. Got to 197 there on that week. But yeah, I just wanted to give a quick update because I know that all of these energy stocks are trending off the potential rate cuts, and I know that this was a stock that we were looking at a bunch of times on the channel, and it was just kind of surrounded with negativity, right? So now we have some positive pops here across the board in the energy sector, and we got something like STEM, with a nice 15% move, and it's trying to reclaim the trend line here. So I thought I'd give you guys a quick update. But yeah, in my opinion, we have to keep an eye on this trend line looking like about 144, hopefully close at or above that to continue momentum. And of course, here on the daily, this pivot point here of 146. So if we can potentially get at or above both the trend line and this pivot point of 146, if this stock can close at 146 or higher, we could potentially see like that 163 level we spoke about, or potentially the 50-day moving average 171. But again, anything can happen. And in the long term, again, I will say, I'll reiterate, in my opinion, 1 to 2 quarters I think this company has until they turn it around. And then I think that if they continue to disappoint and miss these estimates, I think that a lot of people who were hanging on this entire time, but you have that feeling, not necessarily like the FOMO, but also at the same time, you just don't want to cut the position and just accept that big loss, and then all of a sudden momentum comes in and the stock starts rallying, right? So those people who are still hanging on, I think, in my opinion, I do believe personally that they will lose their confidence in this company between the next 1 to 2 quarters. And if they continue to disappoint, the short sellers will continue to smack it up. Everyone will exit the position. That will add to the sell-off. And then, of course, we're probably going to approach that $1 level. And then we know that a potential reverse stock split may be incoming. And that's when it's really going to start to get ugly. So that's why, again, I say, in my opinion, I haven't completely lost faith, but I feel like it's now or never for this stock, and they really have to start to turn it around and deliver for shareholders. Otherwise, everyone's just going to get fed up and just move on to something bigger and better. But, we'll see what happens. But again, for all my traders out there, again, if you did happen to step in recently at these lows at $1.20, $1.30, boom, now you made a quick 10%, you were in and out, then hey, brag a little bit in the comments section. Let us know, let us know how well you did. And, yeah, that's pretty much it. So I'm going to end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And, of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by. Enjoy the rest of your day.